Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the turbulent week for stocks and all that lies ahead as mega cap earnings loom large. Of course, the Fed meeting, as Carl just mentioned. We trade it all with the investment committee as usual. Joining me for the hour today, Stephen Weiss, Jim Lebenthal, Kevin Simpson, and Bryn Talkington. Check the markets. We are trying for 3 straight up days, and right now we have it, at least if you look at the S&P 500. Which is holding on to 6,900, albeit slightly, I guess. But here's what looms. Let's go to the wall. Because mega cap earnings are looming large, starting on Wednesday. Meta, Microsoft, Tesla. Thursday brings us Apple. You all know by now, you got to wait a while for NVIDIA. But these are the ones right now, Bryn, that matter. They always matter. I feel like maybe they matter even more. Why? Because tech has lagged so much to start the year. Nowhere to be seen on the best performing sectors list, where energy leads the way and materials is next, and industrials follow that, and then on and on and on. And then you finally get to tech, which is down 1.25% to start the year. What do you think?
Well, it's been a great 1, 3, 5, and 10 years for tech. So it's nice that some other sectors are actually starting to perform and pull up the weight. You know, I own all of those stocks except Meta. I agree with you. I think next week is going to be incredibly important. Meta does not have a cloud, so they have advertising. So we're going to need to hear how they're going to monetize all of that spend. I mean, is this going to be a metaverse 2.0? You have Microsoft, which is in the software space, which everyone's like, software is dead because of Claude. And so with Apple, looks terrible technically. And so I think you have this, very distinct set of circumstances with these companies next week. And I think investors want to know, do I want to keep these heavy positions or do I want to continue to diversify? And so the jury's still out, but I do agree this is going to be really important for all 3 of those. I feel Tesla is less important because we're more interested in like what's happening with robotaxis. We know that earnings I don't think are going to be great from car sales, but the investors have been more than happy to discount that and say, we will give this stock a high multiple because of the future earnings of Optimus, robotaxis, and Cybercab.
Let's show you once again the mega cap performance year to date, just to give you a scorecard on what we're talking about here. You know about this huge run in Alphabet, which is up 5.5% year to date. It's picked up right where it left off in 2025. Amazon, has it woken up? Maybe. It's up 4%. You could make the case, I think Bryn's right, that Meta is the most important next week just because of that big slide last quarter. Weiss, you take a look at that. Could you make the case that it's Meta? Remember the stock?
Yeah.
What it did after earnings last time? Because, Mark Zuckerberg, they talked about all the spending that they're going to do. Could you make the case it's Apple, which is off for 8 straight weeks? They have a lot to say. Could you make the case it's Amazon, which did next to nothing last year but is off to a good start? Maybe Microsoft, stock up 5% or so in the last 12 months. There's a lot going on here and a lot to prove.
And I think Apple's a completely different bet, because the bet there is, will they be in AI or will they not be in AI? So you're going to need an announcement like that in the call. I don't think you're going to get it. But Bryn makes great points on Meta, and I've been thinking about it recently. And I'll just, double click on what she said about Meta. Meta's building and putting all that CapEx into their own products right now. So versus Microsoft spending similar amounts roughly that can leverage that cost eventually across their cloud as well as their own products. So they're also the tool belt, which I like. So it wouldn't surprise me. I know this is a way out there thought. It wouldn't surprise me if Meta one day goes into the cloud business. I mean, they've got the capital to do it, and we know there's a shortage of cloud capacity with all the AI. So, but this is a critical quarter for Meta. I actually
there's the chart, right?
Yep.
That you see before you go down the slope.
Yep.
On the far left side of the screen. That's exactly when the earnings report last happened. And that's exactly the slide that followed suit. Now,
the report was good, by the way. It was just the commentary, which was not.
Now, when they've gotten a smackdown from either the market or a shareholder, Brad Gerstner, they've listened. Will they take that to heart, so to speak, this time around and tell you something else about the amount of money that they're willing to spend so that the market can be soothed somewhat about the time frame for the return on all that invested capital?
And the answer is I think they will. I think they will, because he has done that. If you go back to when the stock's trading in the 30s, and the issue was, do they have a mobile app or do they not? And they rose to the challenge. It had already been planned. So I think what he's going to do, he's not spending money recklessly. He doesn't do that. He's seeing
Well, no.
the way he's seeing that way in the market.
What do you mean he doesn't do that? That's the whole point that the stock, I think it was in 2023, had like his worst year ever, because it was deemed that he was spending money recklessly on this metaverse and all that other nonsense that was away from the core of who they are. And that's why Brad Gerstner had to write the letter. Right.
And they're not doing that. I don't think they've done that since, because lesson learned. So I think it'd be very difficult. So I think that he will come out and talk to about it. He will come back and talk to an ROI on those spending dollars. But again, it's wildly out there. It wouldn't surprise me if they go into the cloud business. They should.
All right, Jimmy. Like I said, you can make the case for a lot of these names. Which one stands, out there with all of the spotlights on? You think it's Amazon?
I do. And look, part of this is just pattern recognition. For the last more than a year, these stocks have not been moving monolithically. The so-called Mag 7 have not been moving together. We know that. And what we have seen with basically all of these names is that at unsynchronized times, they go into the doldrums and then they rally, right? We saw that, Scott, with Apple last year. After a long rally period, it just shot to the moon. We saw it with Google. I think Amazon is due. When I look at the valuation of the stock, yeah, it's a little bit pricier than the rest of them, but we know that's at least in part because they're sinking so much into their business development. Whether it's Amazon Web Services, whether it's logistics, I think that the valuation, if you adjusted for that, is a lot cheaper, and that's the one that I think money is going to start to flock to. I don't think that something like Microsoft is in the hurt locker, but I will be interested next week to see how it responds to earnings, and here's why, Scott. I would expect the earnings are great, but when we see a stock that is down year to date, I wonder if any pop on good earnings is used as an excuse for shareholders to actually take money out. I think that share price reaction to what I expect to be good earnings from Microsoft will be a big tell, and what I expect, Microsoft probably comes down even despite good earnings.
Microsoft has kind of been in the hurt locker. Can you pull that chart out a little longer
it's down
to
more
show
than 15% from its high?
Exactly what we're talking about, either from the high or, I mean, that's not a really impressive chart. That says hurt locker to me.
I hear you. And that's why, just to be clear, I think that they will have good earnings, Scott, but I do think that shareholders will be looking at that as a potential exit ramp. I wouldn't expect a pop.
The questions on Meta and Microsoft, have they pulled forward a disappointment in the quarter? And the reason the stocks are up today is that they think the stocks have fully absorbed that news and moving up, is my guess.
You do own the RSP, which is the equal weight. Obviously, you don't have like real small cap exposure, which, by the way, the Russell 2000 has outperformed the S&P for the past 14 consecutive days. That's the longest streak since a 16-day stretch, all the way back to '96.
Yeah, I mean, small caps definitely, even with rates rising, albeit today, but small caps have done very well. We've chosen to play it with RSP. I also bought Apollo, KKR, other financials that are exposed. But I think it's important, just going back to tech for a second. If you look at tech earnings are looking to grow, like the Mag 7, around 26% this year. But if you actually break that down and you take NVIDIA and Broadcom out of that, Google, Meta, Amazon, and Apple, those companies together are looking to grow earnings about 13%. And so is 13% enough to get multiple expansion? And I think what's going to happen, especially with Meta and Amazon, is let's talk about margins. Because to your point, if they continue to do the CapEx and margins start to continue to come down, I think that's really where you have a multiple issue. Because one of the main reasons these companies have enjoyed incredible returns the last decade is the margin story. And to me, that's where you have to have CapEx spending, thoughtful CapEx spending, but also keep that margins. Otherwise, I think this market will continue to penalize these companies discreetly.
Of the past four, you can maybe hang on some headlines that have come out, obviously, some of the social media posts and some of the planned executive orders or the like that has weighed on names here, some of the credit card ones for obvious reasons. Bryn, speaking of, your new buy is Capital One. What's in your wallet? It's Capital One, right?
Yeah.
All right, well, this one is now.
It sure is. Yep. Yeah, so I actually took it was my final trade the day that President Trump announced that he would like to have 10% caps. And so I thought it was overdone. I've been listening to this call the last 3 quarters. Rich Fairbanks, the founder, CEO, love that. He's a total rock star. They did an acquisition that they announced today of this company called Brex that I wasn't familiar with, that really is on the enterprise side of putting together software, applications, all of this great stuff. I believe that Brex was valued around $12 billion back in 2022. They bought it for $5 billion. They are moving upscale to the consumer. They are moving into the enterprise, which Rich says this, the enterprise say going against American Express is a $2 trillion industry. Brex is really important. I think it's a great company. I'll be buying more Monday. Let's let it settle in here. But if you want to look at a financial that, and also they talked about retail. Auto loans are good. So all this Tricolor and First Brands last year that we're talking about, that autos are doing terrible, their auto book is actually doing quite well. Their consumers doing well. So I think this is an overreaction today. And probably we look at it in 2 months and it's filled this gap that it's lost today.
Do you just not believe this 10% cap is going to happen in any way, shape, or form?
Well, I mean, just listening to Rich, he didn't mince words. He said it would cause a recession. You are hearing other companies saying, well, we'll issue a $1,000 card with a 10% cap. So we'll see if it goes somewhere. But I don't think we're going to have across the board. It just doesn't make any sense in our economy that you're going to have across the board a 10% percentage point cap. But there's definitely a non-zero risk that would happen. But I'm gonna go with a great founder CEO that's making strong acquisitions. They closed the Discover acquisition already. So I just think this is a neat company to own, to buy on weakness right here.
Okay, speaking of the financials, Kev, Bank of America is down 6% year to date. It's a new buy for you. Tell us more.
And again, this is in the growth portfolio, which is hard, sometimes hard to swallow when you get so caught up and wrapped up in the tech trade. But like so many companies this earnings season, when you post good numbers but have a little bit of a weaker guidance, you're seeing these stocks sell off. So this gave us an opportunity to own a financial name in the growth portfolio, playing into that breadth theme. We already own Goldman Sachs, JP Morgan, American Express, Visa. We're fully stacked in the dividend portfolio. But this is a member of the Russell 1000 Growth Index. They have Merrill Lynch, which we think is a true gem in the portfolio. They've gone through some problems, but the earnings number was really good. Low PE, single digits, price to sales 3.5%, 4%, solid dividend, lots and lots of free cash flow, and no lawsuit, at least not yet, by the president.
Yeah. Why do you think these names that got off to a good start and looked pretty darn good have struggled like they have?
Well, I think that's part of it, is that they're in the sights of Trump. And, you have to understand why the 10% cap isn't going to work. Because the banks, when they take a look at their whole portfolio of credit card holders, having 10% doesn't compensate them for the risk of the credit card holders that don't have the good FICO scores.
Is it even worth talking about stuff? I mean, honestly, that the chances of it happening are slim and none, and Slim just left?
I don't think so. I agree with you.
You know what I'm saying?
I agree with you, but they're reflecting. Right now, they moved up. I think the quarters were universally pretty good. JP Morgan, there was some criticism, but I thought it was a great quarter. I think it's just a sell-off, basically, on profit-taking. For what reason, I don't know. But, you didn't have all of them report great numbers. And it's always the lowest, water finds its lowest level in earnings situations, and that's bringing them down.
I usually like to try and bring things full circle by the end of the A block from where we started, with a theme that plays into that. And I think we'll do that with looking internationally for a moment and noting that the emerging markets hit a record high on Thursday. In a week in which Sell America has been a topic again. People look at what's happening because of the rhetoric around Europe and Greenland. Whether that is going to be a thing, whether it's durable or not, remains to be seen. However, nonetheless, there's a story out from Reuters. Big North European investors reassess U.S. exposure. It's worth noting, by the way, that the Nordic region is home to some of Europe's biggest pension funds by assets.
Yep.
So there's the idea of selling
Norway.
treasuries, right? That's one thing. Jonathan Krinsky of BTIG talks about losing prestige worldwide, what that could mean if it's some sort of durable trend. Last year, international markets outperformed the U.S. by the widest margin in however many years it was. How do we think, Jimmy, about this?
Look, in our strategic asset allocation, so if I take off the hat of being a portfolio manager and look at a full asset allocation, we do think there should be emerging market and developed international exposure. Having said that, we are not leaning into it, which is meaning we're not tactically overweighting this sector versus the weightings that we've had for the past several years. That's our way of saying that, yeah, okay, there are the forces that you're talking about, Scott, but those forces have been talked about for quite some time now, and if we look at actual capital flows, they don't show a mass exodus out of U.S. markets, and in particular for U.S. stocks, it shows inflows. Treasuries, little questionable.
Okay, but that's sort of apples and oranges to the broader picture. Yes, it's important to talk about the flow of capital potentially moving out of the U.S., which seems unlikely.
Right.
Biggest, deepest markets, et cetera, et cetera. But the performance is another thing. Brazil up 10% this year. China up 8.5%. Japan up 7%. Mexico 6.5%. Canada 4.5%. Hong Kong 4.5%. London 2%. The DAX up 1.5%, and the S&P at the bottom of the barrel. Up 1. That's part of the point.
Right. So if you're going to overweight these sectors, again, we're at a neutral weight. But if you're going to overweight them, you're kind of buying into what Mark Carney said. I'm not saying he's wrong, but I do think it's premature to make this bet. Mark Carney said that basically the U.S.-led world order is not just undergoing transition, but it's permanently rupturing. And you can see that in things like the European Union having a trade deal over the last couple of weeks signed after many years of negotiation with South American countries. I right now, and we as a firm, don't think that the U.S.-led economy is actually going to rupture permanently. There are some threats right now, but we're not willing to change our investment stance in terms of that being a permanent rupture.
Okay, so
look,
real quick.
Defense budgets also drive economies. And to the extent they bring more of their defense budget spending overseas and spend more, that'll help drive their economies as well.
So let's squeeze in a break. We come back. Weiss, you own the GLD. What do you make of this remarkable run? Is it more durable than it's been? You tell me. I don't know.
Yeah. Well, first of all, Bill's done a great job on it, and he was in it long before I was. I think it does still have some legs. As long as we have, geopolitical instability, this is a place where someone can go to hide. And then you've picked up the momentum players in this trade as well. So everybody wants to see 5,000. I hope it doesn't turn into Bitcoin 125 when that was the top, and then it just kept falling back. And to me, that's a very real risk, because while there is some tangible value to gold, it's not reflected in the gold price. There's a little fluff in there because we just don't know how to really value it, because it's a safe haven and it doesn't trade on intrinsic value. So the bottom line is, I think it goes through 5, but it could very well fall back from there.
I'd rather play the miners, Scott. Gold's a great commodity for sure. I think there's no comparison to Bitcoin, but when we're looking at AEM, which is a stock,
fundamentals that I was talking about.
I don't think so. When we have there's a use case for gold. I don't know that there's a use case for Bitcoin. I learned that from you, so that wasn't an insult. But the AEM, the Agnico Eagle, which we own, is up over 130% last calendar year, 52-week high today. You get a dividend, strong dividend growth, great margins, and when labor and energy is cheap, the efficiency is even greater.
You all blinged out on the weekend? Is that when you put your gold on? That's when you get your gold on?
I've got a golden shovel.
Yeah, I'm sure you do. I'm sure.
For all the stuff he talks about, that's the shovel.
All right. We get serious for a moment.
Yeah.
Because we do have a developing story. A major winter storm that is bearing down on a large portion of the U.S. this weekend. All right. So Intel is, if there's a stock of the day, I guess this is it. It's down 16.5%. That's the lows of the day on the week outlook. Kevin, you own it. This story is, I guess, complicated by the fundamentals versus the backstop, okay? Declining fundamentals versus a government backstop, which is why the stock before this move was like the best performing chip name year to date by a lot. I mean, it was like parabolic. If you look at, can we show a year to date on this? Look at that. So how do you assess it knowing that you still have, I believe, or at least the people who are bearish this name, fundamentals that are questioned, versus the fact that the government is in it?
Yeah, I wish we were talking about it yesterday. It would have looked a lot smarter. We bought this about a month ago at $42 a share.
Wow, no, you might have been talking it up yesterday, and then it would have gone down like this. You look like an idiot.
Yeah, either way, I look like an idiot with this one. I don't think there's a win. Yeah. So I'll tell you, with this stock, I trade like a meme stock. It's a classic sell the news event here in a very, very big way. We looked at this really as something that was a complement to the AMDs, the Avago, Broadcoms, the NVIDIA. It's a small position in the growth portfolio, new position, ran up way too hot, way too fast. The numbers were good, the guidance was bad. It's a demand story. They have demand, they don't have supply, so maybe that works out. But what I don't like is the single-digit growth expectation. So if you're an investor in Intel and you're thinking about it as a 2027 story, maybe you're in it. If you're looking for a short-term trade or a snapback, you're going to need a tweet or some kind of memification to get it to move. So I would not follow me into this on weakness.
Okay. Let's get another move from you. It's Medtronic.
Yeah, we haven't.
Healthcare is the second best sector over the past 6 months, but obviously that's sort of cooled off by a lot. What's up with this one?
We haven't owned this in probably close to a decade, Scott, but this is a story of improving margins, very good dividend, lots of free cash flow, 16 times forward multiple. But the real reason that I want to be in this name is because of the demographic. You think about who's the potential customer base. And this is a baby boomer market where more of us, not all of us at the desk, but a lot of us age every day. We get closer to needing some of these things.
You speak for yourself, but that's okay.
I get older every day, and Medtronic is a stock that has cutting edge. We also Intuitive Surgical, which we'll talk about later, but it's the same theme. Tons and tons of potential customers and lots of profit. So $5 billion annually, and I expect that to go up. As a side note, they've increased their dividend for 48 years in a row. So not quite a dividend king, but almost there. Okay, let's look at Disney. There's a regulatory filing that they have reiterated their plans to name a successor to Bob Iger in early 26 in quotes. Jimmy?
I feel like we're in early 2026.
Right, wow,
right?
That means it could come at any time.
Yeah, I mean, and it really should. It's one of these things like, I don't know if it's like Trump with selecting the next Fed chair, but it's like, don't we kind of know who it is? Like, let's just get it out there. This is an unnecessary overhang in my opinion. I'd like to see this announced. And then we just focus on the fundamentals of we've got a run at hot economy. We've got low unemployment at 4.4%. Let's get people on those Disney cruise ships. Let's get people in the movie theaters, which frankly they are doing. So let's focus on that, not the CEO turnover. Okay. Let's do SLB, because they beat and they raised their dividend too, which is in your wheelhouse, Kevin, which you own that name. Yeah, and this is a relatively new name for us, Scott. We didn't get into it because of anything happening in Venezuela, but certainly the stock moved a lot higher after the fact. It's given a lot of that back, but we like it because of the expectation for energy. In 2022, we had Chevron, ConocoPhillips, and Marathon Petroleum. They worked really, really well. We got away from the trade, and we're bringing and introducing energy names back into the strategy this year. Brent, I want to come back to you on Tesla for a moment. It reports on Wednesday. You already said you're not really expecting great things. I should note, too, the stock has underperformed the S&P 500 by 20 percentage points and the NASDAQ by 50 over the past 5 years. Now you have the Wall Street Journal out today in a report that says Musk is diving back into U.S. politics. That's their headline. Just when investors thought that he had maybe put that in the rear view, pardon the pun, and had decided to focus more on the issues that matter most to you. You hear this headline, you see the stock performance, you think what?
Well, I think from the fundamentals, which are earnings, that earnings are expected to be down 38%. So not going in the right direction, as I said earlier. I think I've done a great job trading this stock because I continue to sell calls. Right now I have 500 calls that expire February 20th, and I feel there's a very low probability that those get called away. And so I'll take advantage of those political opportunities if that lends itself. When he announced the American Party, the stock was down, 15%. I bought more. I'll sell calls again. And so I think this is one of those names that you just own the stock and you time it right. Time it wrong, you're right. But if you own the stock add to it when you have these events and sell calls, you can have a really wonderful total return. So I'll just continue to do that because I do think this is like one of the great disruptive companies, and I'm a big fan of the innovation and the people that he has around himself at Tesla, SpaceX, et cetera.
Okay. IBM's Wednesday also, Kev, you own that name.
Yeah, we didn't talk about this as one of the Mag 7 stocks, but quietly it's up, I don't know, almost 30% in the past 12 months. The numbers were good last quarter. They should be good this quarter. What to watch for? Consulting services. We would like to see that stabilize.
You want to take Altria, which is Thursday?
Yeah, I don't have any high expectations there either. Kind of weak off the last quarter. You just want to see them maintain the cash flow to support the dividend. There's not much more to that story.
Verizon next Friday?
Even a more extreme version of just hoping that they can make enough money to pay the dividend. I wouldn't be buying either one of those before the print.
Wow, you don't sound excited about either.
I've hated Verizon for 7 years. We've owned it for 7 years. It's
just
a
for the dividend?
Play. Yeah, we have to have an allocation to a telecom. So for many years, it was either Verizon or AT&T. At this point, maybe T-Mobile is even a better one to take a look at. But we've owned it. It hasn't done anything in years, but it pays us 7%.
Exxon and Chevron are next Friday. Jimmy, you have Exxon.
Yeah, and I think the thing here is that we are actually starting to see some upward pressure, not just on crude oil, but natural gas. And that's going to flow through to a diversified company like ExxonMobil. You got good refining margins, transportation, distribution, et cetera.
All right, we'll do finals next. Closing bell, 3 o'clock Eastern. We'll have an interesting last hour, I can guarantee you that, because we'll speak with Tom Lee and Keith Lerner, Malcolm Etheridge, Jeff DeGraff, and Lo Tony as we look ahead to those mega cap earnings, which are looming large next week. Bryn, your final trade is what?
We're going to stick with Capital One. Very integrated, vertically integrated. They own the rails with Discover. They're the issuer, and now they have B2B with Brex. I think it goes to 250 in the next year. Okay,
Mr. Gold.
Medtronic, it's a new position for us. Surgical, innovative pioneer, tons of free cash flow and improving margins.
You gonna go watch like Austin Powers or something this weekend? You feel good about yourself? Farmer Jim.
Transocean, $700 billion of free cash flow projected this year against a $5 billion market cap. You do the math.
Okay.
Caterpillar, I mean, even it's down 3.5% today. It's not a big sell-off in the context of what it's done, but I'd buy it here.
All right. I'll see you for that final stretch. As we said, 3 o'clock on Closing Bell, the exchange. All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with stocks in the storm, one acting more volatile lately, the other looking especially vicious as it slams a large part of the country into the weekend. We'll get that update in just a moment. In the meantime, let's show you the scorecard here with 60 to go in regulation. We have been mostly lower throughout most of the day. The Russell getting hit pretty hard today. S&P and the NASDAQ are trying to get something going. And the NASDAQ's been the best of the majors. The Russell's been the best by far year to date, but it's given a little bit back. Intel, it's getting hammered today after giving a very weak outlook. That stock down at the lows of the day, down 18%. Microsoft, Meta, Amazon, they're running a bit as those earnings loom next week. And that takes us to our talk of the tape. And nat gas is just exploding this week. Pippa Stevens joins us now with more. Breathtaking to look at.
That's right, Scott. And one trader calling it a historic week, and the storm hasn't even begun, meaning we could see more fireworks for nat gas prices, especially with the contract set to roll on Wednesday. The spread between the front month and second month is now $1.76. That is highly unusual and demonstrates the current market tightness. A lot now depends on the direction of the storm and whether energy infrastructure is impacted in the east and south central, with Citi forecasting 80 BCF of supply at risk. Now, this week could see the second largest inventory draw on record. Right now, storage is 6% above the 5-year average. But if February winds up being chilly, the need to refill storage could add price support for injection season and lift gas prices. Scott?
All right, Pippa, thank you for that. Tom Lee, as I said, is with me now as we turn back to the markets. He is a CNBC contributor, of course, Fundstrat Global Advisors. So it's good to see you.
Great to see you, Scott.
It's been a turbulent week.
It has.
Is it portend something that's going to come forward here for us?
Well, part of it is, of course, as you know, we're in earnings season and markets tend to be volatile around earnings. I'd say that some of the high-profile declines like Intel look bad over a one-day period, but Intel was $17 a year ago. So to me, it doesn't surprise me that you could see some of those stocks have done really well get punished a little bit on earnings.
I mean, this is a hard one to say it's representative of anything. I mean, you know, the company's obviously been challenged. They have the government backstop in there, and the stock was up a ton going into the print. As we turn, speaking of the prints that matter next week, the mega caps, which you still love, but not quite as much?
I mean, we still like the Mag 7 and the mega caps because they're great earnings stories and they have a lot of visibility. But as you know, our top picks this year in terms of sector is energy and basic materials. But as far as earnings stories go, yeah, I think next week's critical because you got most of the Mag 7 reporting.
Tom, you're crushing that so far with that call. Energy and materials are the two top sectors.
Yeah.
Why were you leaning that direction as the year began?
You know, we were betting a bit of mean reversion taking place in 2026. One of the things we identified in our 2026 outlook in early December was that energy and materials underperformed over the last 5 years at a level that in the last 50 years have marked turning points higher. So we were betting that so much of the bad news was baked in that they could have okay fundamental years, but the stocks could do really well.
I feel like you were on the right path as it pertains to small caps and the Russell just a little early.
Yeah.
I mean, remember, let's remind people, last year you told me up here that we were going to have a 50% gain in the Russell.
Yeah.
Now, obviously, we didn't have that, but the Russell is almost outperforming everything else over the past year, and in 1 month, it's up 5%.
Yeah.
That going to continue?
Yeah. One of the things we talked about a lot about last year was that when small caps turn, it tends to be a multi-year. In fact, it could be up to a 12-year period. So the last turning point for small caps, and on a relative price to sales last year or price to book, they were at the exact same point they were in 2001. That was a launch point for 12 years of relative outperformance. So I think small caps benefit from a Fed turning dovish, possible M&A wave coming, an ISM turning back above 50, and then catching up to where EM, because EM did really well last year, and small caps usually track that. It didn't.
Fed turning dovish, you know, we have a meeting next week, in case you didn't know, and not expected to do anything. So maybe not as dovish as people thought several months ago. And by the way, as we look at prediction markets, as we think about who might be the next Fed chair, BlackRock's Rick Rieder is now the leading contender in prediction markets. There's Kalshi. We, of course, have a partnership with them. 52% leaning towards Rick Rieder. We shall see. Do you care how much you think about who the next might be?
I mean, it's important because it reflects the market. Market needs to respect who the new Fed chair is. Rick Rieder is somebody that markets really do respect. So, as you know, the Fed has to communicate not only with the White House, but also with the bond market. And I think Rick Rieder's experience in the markets world makes him very credible.
But you're not expecting anything next week, right?
I'm not, but I'm also expecting the Fed to reiterate that they are focused on no longer fighting inflation, but looking at the job market. That's a Fed put on the economy. To me, that's a dovish tilt. And as long as they're not fighting inflation, to me, that's a dovish Fed.
And that's why do you think the equal weight S&P is up 4% so far this year compared to the S&P, which is up 1%, and the NASDAQ, which is only up 1.5%?
Yeah, I think so, because as you know, not only is the Fed no longer is trying to establish inflation credibility, which is hawkish, QT has ended, which to me is the same as a version of QE starting. So we are facing a dovish Fed. Even if there aren't cuts, it's still a Fed that wants the economy to do well.
I'm not sure everybody sees every appearance that you have, and people generally think you skew bullish, which you obviously do. That said, you're still looking for what you've said could be a bear market in the middle of the year. Do you want to explain one more time why, even in the midst of this bullishness we hear from you, you still think stocks could have a bit of a rocky road at some point?
Yeah, I think 2026 has the same contours as last year. So in 2026, I think there's a good fundamental earnings story, earnings growth accelerating. But we have two transitions to deal with. One is the Fed, a new Fed. The market always tests a new Fed. So from confirmation, let's say that starts in March, a new Fed happens, and then the market tests him. That's one source of a drawdown. The second is, of course, policy. The White House is much more deliberate this year in picking winners and losers, and there's some uncertainty around the tariffs. Last year, that was enough to drive a 20% decline in the S&P. So I think the combination of policy uncertainty along with Fed could create a drawdown that feels like a bear market, but that's from higher levels as well.
Did it make you nervous, the events of earlier this week, speaking of policy uncertainty? You just don't really know what's coming anywhere, for that matter, whether it's social media or policy by post or what have you. What did you learn, if anything, about Tuesday's events and then how the market acted subsequently?
Well, I think it's a prelude to what a bigger drawdown looks like, because just a social media post about Denmark caused a 2% decline in the S&P and a spike in the VIX. And that was, of course, quickly diffused. But imagine a scenario where there's a series of policy headlines that markets get anxious about. It could easily lead to a larger drawdown.
Bitcoin, what's going on there? Risk on, it doesn't really do anything now. Risk off, it doesn't do anything either. What's it correlated to, if anything?
I think crypto has been suffering from deleveraging. You know, in October 10th, there was that one-time price shock that was the biggest deleveraging of crypto in history. And then this week, crypto was doing well until the Greenland announcement, which triggered the move in JGB yields and a deleveraging in crypto. So I think crypto, unfortunately, is sort of would track gold, but you have to subtract deleveraging, and I think that's really what's been hurting crypto.
I mean, people, these calls that, it's the new reserve currency, break out the gong on that, that it's the new gold, break out the gong on that. I mean, have you rethought where you thought that this could go over a period of time? Because your targets on it were so unbelievably lofty. And now I question as to whether they could ever be reached.
Yeah, well, I think Davos was pretty eye-opening. Larry Fink talked about everything being tokenized onto a common blockchain. David Sachs talks about how once the Clarity Act's passed, digital assets and basically the architecture of Wall Street are going to merge. I think crypto is still really relevant as a settlement layer, but it is more a story of smart blockchains, which is more of an Ethereum story over Bitcoin. And as you know, Bitcoin maybe is getting dinged because there's some concerns about quantum being able to steal or capture a third of the Bitcoin legacy wallets. I don't think Bitcoin's story is broken. I think it is waiting for clarity, but institutional adoption's growing. So I still don't think $200,000 Bitcoin is that crazy. It is just a doubling in price. And think about where gold was and how silver's moved. Historically, those big parabolic moves in crypto follow parabolic moves in precious metals. So I don't think that this is a broken story unless it doesn't happen in the next couple of years.
Okay. Don't sound as though your conviction is as resolute.
Well, it's
perhaps.
those gongs, Scott, the
Well,
gongs.
I mean, it's the truth,
They're
though.
still ringing in my ear.
Well,
Yeah.
you're too young for the Gong Show. You should go back and check it out.
Yeah.
We'll see. Tom, thanks. That's
Thank-
Tom Lee.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is actually, are you ready for this? It is 6:20 a.m., January 26th. It's Monday, pre-market. And why am I doing a video this early? Well, I'm not exactly on the East Coast anymore, as you know, right now. It's winter. I think I'm going to be staying the majority of this winter in a nice, warm, safe climate, which is where? I'll show you guys. Let me show you what the weather looks like here. I'm in Tenerife, Spain. A lot of Americans don't even know where that is. It's the most southern part of Europe, guys. In the wintertime, are you ready? These are the average temperatures. Okay. Look at this. This is what it's going to look like for me for the rest of this week and going forward. And I'm enjoying my stay here. I'm not going to lie. Sunny days, it's perfect weather. Making some good friends here too. Anyway, let's get into the stocks. I'm not trying to rub it in your faces too much here, am I? I hope not. I know about the snowstorms that are taking place all over the country, but I had a feeling, that this was going to happen. We had too many mild winters in a row, and I said, "Oh boy, I think this coming winter is going to be a doozy." I said, "You know what? I got to get out. Let me get out of the country. Let me find a warm, really warm climate. I need a little bit of change too. Sometimes you need a little change in your life, a little change of the norm. And this has been really positive. Anyway, I'm still doing my trading, as you know, and I'm still putting out the videos. In fact, this weekend I did put out another members only video, guys. And this is the members only video for the week ending January 23rd, where I went over my entire portfolio. Okay, and I added 27 new stocks into this watch list that I observed throughout the week. And then if I decide to add some of those, I share those trades with legend level members during the week. There are 3 tiers to my memberships. You've got Blue Cloud Supporter. Okay, under this level, you can request a stock or ETF be analyzed on an upcoming video. You've got Blue Cloud Trader, the next level up. Under this level, you can access those member-only strategy videos, like that video right there. You'll be able to access it. Okay, and I do 4 of those per month on average every weekend. And then Blue Cloud Legend level membership. Now, under this one, you get those videos, but you also get access to some of my day trading videos as well as um, the daily stock and ETF trades update. What is that? I'm basically sharing my trades before the market closes, and had a really good week last weekend. I'm sorry, last week with trading. A good one before that. This has been a good 2025 and 2026 for the memberships. And we've got a lot more new members. So consider becoming a member. You hit the join button there, and that's how you can access it. And then if you want to subscribe for free to the channel here to see some of the free videos, like the one that you're listening to right now, you just hit the subscribe button, the notification bell, so you get the notification the second that it gets posted. All right, now we got that out of the way. Why don't we talk about what is happening here in the markets? And here's what we're going to do. We're going to cover a whole number of stocks, guys, that they talked about on the halftime report and on closing bell. That was Tom Lee. And we're going to take a look at his ETF as well. It's called GRNY, is this ETF. We're going to look at BMNR. We're going to look at all the stocks that you see there. There's about 22. We're going to look at the S&P 500, the indices. We'll look at some of the Mag 7s and even some member requests. Okay, so you can see the list right there. Before we do that, let's take a quick look at the markets, though. At the end of the day, what did they look like? The Dow was down 0.58% on Friday. NASDAQ was up 0.28. S&P 500 was only up 0.03. The Russell 2000 took a little bit of a hit. It was down 1.85%. And right now, it's at 6:24 a.m., but here's a latest update. Let's find out a little bit about what to expect for this coming week. The U.S. futures edge lower as traders await the big tech earnings and Fed decision amid surging gold and risk-off sentiment. Traders are bracing for a busy week with Apple, Meta, Microsoft, Tesla, and Netflix earnings on the deck. Wednesday's Fed decision expected to keep the rate steady, with focus on dot plot projections and Powell's commentary. Gold extends its safe haven rally, hitting a record above $5,000 an ounce, up roughly 2%. Did they just update that? They did. The US dollar weakens to a 4-month low and yen strengthens, fueling further risk off moves. Miners and energy stocks outperform as geopolitical tensions and US government shutdown fears drive safe haven demand. Semiconductor and airline stocks lag in the risk off environment. USA rare earth USAR soars over 50% on reports of a $1.6 billion Trump administration stake. So this is the theme in 2025 where the government is now investing in different stocks, like Intel, for example, was one of the companies, and now it looks like they're getting involved in USAR. So yeah, they're taking our tax money and they're investing in stocks and companies, which is kind of interesting. All right, let's go ahead. Let's go ahead and take a look at the heat map. And there's a new feature here in FinViz Elite, which I really like. So they've added this thing called themes. All right, so I want to show you guys. Let's click on that for a moment. And here you can see artificial intelligence, right? And these are based on the different types of artificial intelligence. And you can see how those performed on Friday. Actually, why don't we do a 1-week performance so you can get a better outlook of what's looking really strong. You can see the commodities doing really. Look at gold up 13.58, silver up 22% in 1 week, folks. The precious metals, right? Rare earth up 28.04%. Industrials, battery, recycling. That's good. I do like to see that. that these are doing well. And then you've got some of the commodities, agriculture looking pretty good here. Interesting energy, traditional. You get oil production, oil refining, oil services, majors, thermal. Okay, and then let's go back to the S&P 500. Let's look at the individual stocks within the this S&P 500, and you can see that for the week, right? Energy, obviously, the winner. Healthcare did pretty well. Micron and AMD up quite a bit. Meta was up 6.71%. Coca-Cola, Procter & Gamble did well, but the financials got a big hit, right? They took a big hit. I think part of it is the targeting by Donald Trump with Morgan Stanley, going and basically lawsuits against um, Morgan Stanley. So that's going to, and you can see down 5.76% for the week for Morgan Stanley. It's going to affect other stocks too, other stocks in that sector. All right. And then let's look at the groups real quick too. So yeah, the 1-day performance on Friday, basic materials energy were the top performers. You can see the percentages right there. Let me zoom in a little bit so you can see that better. There you go. And then for the 1 week performance, again, basic materials energy, healthcare, consumer defensives. 1 month, basic materials energy. Okay. And those are the themes that Tom Lee talked about, right? And so he still sees energy and basic materials as the leaders, and small caps. He's a big fan of the small cap stocks, and they're doing pretty well as well. As you know, IWM has done pretty well. We're going to look at that right now. Actually, let's take a look at IWM, which is the Russell 2000 Index ETF. That was down 1.85%, but if you look at the weekly chart here, we've been breaking through some very important resistance levels, right? So we broke through that 258.20 based on that candle right there from December 12th, and we're still staying above it. On the weekly chart, we did form a shooting star, um, which is a reversal candle. And on the daily chart, we actually did, as you can see here, it looks like it closed under, didn't it? 264.81. By the end of the day, it did. So we're going to take away its flag for now, IWM. But overall, it's a very strong uptrend, as you can see here. We're using the Ichimoku indicator, guys. And just a quick little synopsis of this indicator. Let me get rid of these lines for a moment. What you've got, it's a Japanese indicator, and what it does is essentially what we're looking for. Ichimoku stands for at a glance. We want to see where price is, these Japanese candlesticks, in relation to the moving averages. There are 5 moving averages. The green one is a 9 period. So it takes the highs, the lows of the last 9 periods, divides it by 2, and it plots it right there under the candle or above it, depending on where price is in relation to it. The red line is the midpoint, okay, of the last 26 periods. Similar concept. Takes the high of the candle, the low of the candle, divides it by 2, and you get the midpoint of the last 26 periods. That's the red line. That's Kijinsen. So you got Tenkan-sen and Kijinsen. Then you've got the Senkou Span A, the light colored blue line, which is part of the cloud, and Senkou Span B. Senkou Span A is derived by taking the midpoint of these 2 moving averages, the Tenkan-sen and the Kijinsen, right there, the midpoint, and then projecting that 26 periods into the future. And that's how it's plotted. The Senkou Span B, the purple line, is the midpoint of the last 52 periods, okay? But instead of plotting it either, like under or above the candle, it's actually 26 periods into the future, which creates the cloud itself. So we can see where basically, the cloud gives us a little bit of insight of what's happening. And we want that Senkou Span A to be above the Senkou Span B. That's a bullish cloud. We don't want that type of situation right there. If you go back in time, you can see here the Senkou Span A, there was a cloud twist, and Senkou Span A was under Senkou Span B, and price was also under the cloud. Very bearish. We want price above the cloud. We want price above the moving averages. There's one final moving average, and that's the Chiku Span. That's the current price right there, projected 26 periods into the past. And we want to see where that white line is in relation to the candle 26 periods ago. It's basically a line form. Instead of a Japanese candlestick like you see here, it's a line. And it helps us to quickly see the strength of the trend as well. When the white line is under, it's bearish. You can see how it led to a decline right there. When it's above, okay, you go to 26 periods into the future, you can see how it led to a nice move up when it crosses typically above the candles. Okay, so now that we have that, we can do the analysis for everything here. Let's take a look at the S&P 500. So the daily chart looks very bullish. Prices above the moving averages. We have a bullish cloud. That's the dotted yellow line is the 200-day moving averages. That's rising. That's looking pretty strong too. On the weekly chart, we are also above the moving averages still. So this has been a very strong and steady rally in the markets. I mean, going all the way back to this point right here, May 2nd, 2025. That was after the breakdown, right? Remember the tariff announcement that led to the big decline here. And then, but then once things got reversed, has moved up over 21% once it got above the cloud. So that's the S&P 500 looking strong. The QQQ ETF looks good still, although we are just kind of consolidating right now, which means that essentially the price is stuck, right? It's stuck in this little range. You can see that very clearly for multiple weeks actually. Um, we're talking about since October. We haven't really moved much. The Qs have not moved much at all. In fact, if you look closely, they're actually building almost like a um, a pattern called a symmetrical triangle. You see how prices just kind of stuck in that little symmetrical triangle range. Once price breaks through, okay, hopefully to the upside. No guarantees, of course, but if it breaks above the upside, we'll see a continuation and we'll see more momentum in the QQQs. But right now, we're not there. So, but we are still holding steady on the weekly. And here's the daily chart. Okay. Look at the cloud too. Notice how the cloud itself, where over here it was moving upwards, right? And it was a thicker cloud. Right now in the QQQ ETF, you can see how the cloud has been reacting. And so that gives us some insight as well. It's all very visual and easy to assess the market when you use this because you can quickly assess it, right? Through the use of just adding it on your chart. And if you like this charting platform I'm using and you want to do the same thing, it's called TC2000. What you want to do is just go to my YouTube channel, Blue Cloud Trading, and then click on 9 more links right here. Okay, read a little bit about my channel, scroll down, and there, the third link down is the $25 coupon for TC2000 software. Okay, and click on that, add your email address here in this box, download the software, click the check mark, and you will receive a $25 coupon towards TC2000 as long as you haven't used it in the last 12 months. All right, next one. DIA, the Dow Jones, that was down 0.56%, but it's holding up above the Tenkan and Kijun. It too is consolidating, right? Not a lot of movement here right now, but you look at the weekly chart, still in a steady, strong uptrend. FEZ is the Euro stocks 50. Okay, so how's a little representation of some European stocks, how they're doing really strong. That $66 level is actually based on a monthly resistance level. We literally have to go back to these dates here. These are the years down below. So if we go, for example, to 2007, December 31st of 2007 or so, that's when we hit the $66. And since then, you can see how the Euro stocks were really not performing that well for quite a while here. We were in a very long and extended multiple year consolidation, guys. These are years down below that you see here, right? And here we are now, January 23rd, 2026, and we're breaking through that $66 level on the monthly chart. This is very important because it's based on January 23rd, Friday's action, and the month is almost over. That means that if this candle actually closes by the end of this month above $66, there's a higher probability that we are going to see a continued bullish run. Because typically when price reaches a level of resistance, sometimes it will retract. Okay, and then you have to wait further. And then you might get another opportunity to get back in and retest that same level. But right now, we are actually breaking through that level. Let's see if we can continue. Let's hope there's no major decline over the next week as those earnings announcements come out, because those are some big names that are coming out this week. You've got we talked about the Russell 2000. That looks really good on the monthly. Obviously, we're breaking also above some levels, and the weekly chart and the daily looks good. Except, well, the daily doesn't look particularly great here because it did get under the Tenkan briefly, but I think there's a good chance that we could recover. The VIX was up slightly, up 2.88%, nothing major. That's the volatility index. That typically, we don't want that to be moving up. We want that to be actually declining, because it represents volatility in the markets. So we're in a healthy level of 16 right now for the VIX. And then let's keep going. We've got some of the Mag 7 stocks. Now, I did take Amazon off. Now, I don't cover stocks that are in the members only portfolio. So if you do want to get access to those, you do need to become a member. Okay. And hit that join button. Here's Tesla. Tesla on the weekly chart is under the Tenkan. Now, just 2 days from now, there's the next earnings announcement. That's going to trigger this stock either to the upside or to the downside, depending on how the earnings come out. It's an unknown, right? But you can see here on the weekly chart last week, we did create a bullish engulfing pattern. On the daily chart, we still have a negative crossover that's in effect here with the Tenkan under the Kijun. We want that green line typically to be above the red line. Therefore, it doesn't get a blue flag. If you see any of these stocks and ETFs with a blue flag, that means that they meet the criteria of looking strong on both the weekly and daily timeframes with the Ichimoku indicator. That's my quick little visual identifier. Let's take a look at Apple. Apple's under the cloud. That's bearish, right? So we are in a downward channel. You can see that right there. And in fact, it's exasperating to the downside here. So like where it was moving down at this degree, at these levels right here, now it's actually going even further. The momentum is increasing. Do you see that white line down here? That represents the ADX 9. I've got it at a setting of 9. If the white line is moving up and the momentum, that means the momentum is increasing. And if you notice that the red line here, that's called the negative DI9, is above the positive DI9, the green line. That's also very negative. What we want is the green line to be above, like it was here. All right. And you'll notice if you go straight up, how that led to a nice move, right? So the momentum is still very negative here. But it looks like we may get a little bit. There is potential here for Apple to. Let's take a look at this for a moment. We're going to look at. I'm going to throw on a support level. Okay, so just as there are resistance levels, there are also support levels, and right now we do have a little bit of support right there on that candle. It is actually more of a weekly level. So the low is 244. Okay, that's the area that I'd be watching. $244. And let me color it light blue to represent the weekly chart. And so it's also coincidentally, if you look at the weekly chart, it's also where the Kijun, the 26 period on the weekly chart, that means the last 26 weeks. When we're looking at a daily, we're looking at the last 26 days, right? So notice how we're finding a little bit of support potential for this thing to pop if the earnings come out positive on January 29th, which is just a few days from now. All right. So there's a little bit of stalling here. I think they're going to be waiting to see what happens here, and then we'll see the price either spike to the upside or drop. And so, yeah, stay tuned. We're gonna see that in an upcoming video here. Meta Platforms is under the cloud, and it's bearish, and it's under the 200. It too will come out with earnings on January 28th. All right, a couple of days. So on Wednesday. So just right now we have a higher low here on the daily chart, but we're still under the cloud. We're still under the 200. This is not a buy signal yet. Microsoft showing a little bit of strength these last few days here, breaking above the moving averages, up 3.28% on Friday, but it's also under the cloud. It's an established downtrend. It too will come out with its earnings on January 28th. This is going to be a really big week for the Mag 7s. It can make them or break them, and maybe we'll make some and we'll break some others. We're going to find out. Netflix, another one coming out. Actually, it came out with its earnings on January 20th. It says next earnings, but it was on January 20th. And let me show you guys something here. Let's go back to the FinViz for a moment. Let's go to NFLX. Okay. And let's zoom out a little bit. Okay. And then what we want to do is take a look at this was the most recent earnings announcement from Netflix. So you can see how um, it was positive. See how it's green and the prior one was negative. See how it had a negative surprise of EPS back on October 21st. This earnings announcement was actually quite positive. The revenue was up slightly, 0.67%. It was a surprise to the upside, so that's good. And so, yeah, Netflix, all right, appears, let's see, whether it says it has outperformed ratings January 21st, January 23rd. It still has a lot of buy recommendations from these analysts. And so, yeah, I like Netflix here, but the thing is, it is still under the cloud. And I want to, this is another thing that we talked about last week when I did cover Netflix. I said, guys, this $82.11 level may be the, you know, the level where it stalls, and we might see a reversal happening here. Okay. Why is that an important level? Because if you look at the low here, that's the prior low, 82.11. That goes back to April 11th of 2025. You'll notice back here as well, price reached that level and bounced. So, history tends to repeat itself. There we are. We came to that level and we bounced off that level. We came back down to that same level and we bounced again. And now look what's happening. We came down and we created a kind of a bullish candle actually, because that wick on the bottom, that represents buying that took place throughout the week. And we can see it more clearly on a daily chart. So you can see here, once it touched that 82.11, buyers stepped in. Okay. They're trying to hold this position basically. And then you've got the very next day on Thursday, right? Thursday, January 22nd, price dropped a little bit, but it never, dropped under 82.11. And then on Friday, more buying, up 3.09%. Now, it does not meet any of the criteria for me adding a position because it's under the cloud still. But I'm just saying that this could be potentially the place where Netflix starts to have a nice rebound. I'll be watching this. We drew this trend line back on January 9th of 2026 is when I created it. You can see that in the little box there. So we'll see what happens. Okay, let's take a look at the next section here. We're going to look at the stocks that they talked about on the shows. And there's a whole bunch, 22. We're not going to spend too much time here. I got to run through these because time is of the essence here. We want to make this video not super, super long. Silver, SLV. They didn't actually talk about this one, but I thought it would be important to bring this one up. SLV, as you can see, was up 6.63% on Friday. It's breaking out to new levels here. It's just on fire. Here's the weekly chart as well. Look at this. I'm a little bit concerned because you can see that this thing is it's just not stopping. But at some point it will, and that will be kind of a danger zone potentially because we might see a quick turnaround here. But right now, weekly, and here's the monthly chart. My goodness, look at this. Look at these moves. Since it broke that 49.22 level, guys, and that goes all the way back to this candle here on the monthly. That's a monthly level. Let me color that purple so you can see what I'm talking about. Because the monthly represents purple. Okay, I've got these colored based on the time frames. Um, Actually, you know what? Let me just make sure it's the correct dollar amount. The high there was 48.35. I got to fix that a little bit. Just 48 point 35. Okay. So 48.35. That is a monthly resistance level that was broken, and that was broken on November, okay, of 2025. November. You can see that right there. Look at this. Since that point, it has moved up 86.66%. And since it broke above the cloud, okay, back here on March 28th of 2024, where it started making sense to look at silver, it's moved up 303.37%. Do you see the advantage there? Over here, did it make sense to be buying silver back here when price was under the cloud and under the moving averages? And if you look right there, once it got under those the Tenkinson right there on the monthly, if we go forward, you can see we can go all the way down to this level right here, to this low. So where was silver for 8.5 years? Okay, 8.5 5 years or so, or 8.6 years, it dropped 68%. You would have been tied up in this thing. Your money would have been tied up for that many years, not making any money. When did it start making sense to get back into it? Right here when it broke through the Ichimoku cloud on the monthly. Is it starting to make more sense why I use this indicator? It can help quickly identify because it's based on mathematical. It's based on the time frames that I mentioned, right? It's based on moving averages, but it's a very more comprehensive way of looking at it of the stock and ETF and its health, basically from a technical perspective. AEM is another one that has been doing really well. Here's a monthly, here's a weekly, here's a daily. It's above the moving averages. I like this one quite a bit. It's been taking off. EEM is another one that looks great. Emerging markets. This one broke above a monthly level, a purple line. Let's take a look at the monthly chart real quick so I can show you. That's, again, going back to when? This goes back to February. Yeah, February 26th of 2021. Okay. These are the years, like I said. So we're breaking through that. And that's a really nice, pretty candle. There's no wick on the top yet. I like that. That signifies strength to me. Look at that ADX moving up while the positive DI is above the negative DI. Here's the weekly chart. Here's the daily. Okay, it's holding up nicely. Up 0.63% on Friday. GLD is another one I like, of course. This one has been doing fantastic. I mean, it broke above the daily cloud back over here, August 22nd of 2025, and it's moved up 46.37%. If you look at the weekly chart, we broke through the cloud back here, okay, on October of 13th, 2023, somewhere around that point. It's moved up 144.83%. It was stuck in this consolidation for multiple years again, right? So you see the advantage, and the reason I also use, obviously I use moving averages, and why I use support levels and resistance levels is because it can give a little bit more insight on, just not blindly looking at the Ichimoku itself, but also looking at prior highs and prior lows. That's important. MDT looks good on the weekly chart. This is why it has these all have blue flag, by the way, because they look good in the weekly. Okay, it is technically did close above the Tenkens in there on the weekly chart and the daily. All of my decisions I make are based usually on the weekly and daily. I look for both time frames to give me the same picture. All right, and if they both are positive with Ichimoku, they're high. Certainly would consider adding those to my portfolio. And those are the types of stocks that I share every weekend when I do my members only video. RIG Transocean Limited on the daily chart looks great. On the weekly chart looks good. It broke through the 200-day moving average. Now this one here has a negative profit margin of 75.71%. But let's take a closer look at that one for a moment. We can go back here and type in RIG, and let's look at the most recent earnings and see what those look like. And you can see that, yeah, the most recent one here, we had a positive surprise of revenue of up 1.72%. So that's good. And if we look further, we can also look at other fundamentals. For example, I can go here to the statements and I can go to the net margins. Okay, the net margins are not looking that great on that one. Okay, the operating margins are better. The gross margins are positive, but for some reason their net margins are not so fantastic. And so, that's quarterly. Let's look at the annual. And if we look here, the net margins are technically stronger in 2024 than 2023. It doesn't go back too far. Bottom line is, this is a strong sector. Okay, this company is based in Switzerland, and right now on the weekly chart, it is emerging. And if you look at the price to sales ratio, which is, you have to sometimes also take a look at the fundamentals, which is why I've superimposed them here on the actual chart. One of the cool things about this platform versus a lot of the other ones, you can't really do that. This one allows you to do that. You can actually put whatever type of fundamentals you want. You click on the edit toolbar here. You click on the plus sign, for example, and then you can scroll down. And do you see all this? I can add any of these at the top of my chart. There's just too many though. So things that are important to you might be something else that you use for your decision-making process. And the fact that you can kind of scroll through these charts and find that and do a scan and try to find them based on those criteria is another cool thing. So it does have scanning capabilities as well. RIG is breaking out on the weekly. On the daily chart looks very bullish as well. I like it. RSP I like. even though it pulled back on Friday down 0.45%. You can see it's above the Tengen-sen there on the weekly charts, looking very bullish as well. That's the Invesco S&P 500 equal weight ETF, which actually looks a lot more bullish than the S&P 500, the SPY. Look at the SPY for a moment. You know, it just looks a little. I like the chart on the RSP more because you can see that broke through that consolidation and continue moving up. Then you've got SLB, which is another energy sector stock, oil and gas equipment and services. And that one also looking good here on the weekly chart. You can see the cloud has turned bullish now, right? 3 weeks in a row, we're above the cloud. That's a good sign. So it's had this big decline here since these highs back here of $62.87. It had dropped approximately 49%. And now, since these levels, it's actually moved up 54.29%. XLE is looking good. That's the energy ETF. And that one is finding resistance though at 49.49. It did break above this one level, these prior weeks from November of 2024. Okay. And then there's one more level from April of 2024 that needs to break above for this thing to continue to the upside. But it looks like the momentum is to the upside right here in the weekly. Here's a daily chart. Yeah, see, it kind of stalled right there, didn't it? It gapped up to that level and moved up a little bit, creating that wick, and then it closed inside in between these two levels. So now the 48.96 has become a support level because it broke through it. And so we need to get above that 49.49 level as well, in my opinion. XLK is technology. That one is just still under this little symmetrical triangle pattern. It had gap down. It moved up. It has not broken back above. It hasn't re-entered the triangle. It's still, it's a little bit suspicious to me, honestly. And I don't like the fact that the directional movement index here, the red line, is still above the green line with XLK. But with all that said, it still gets a blue flag because on the daily chart, it's above the Tengen-sen, Kijun-sen, and the cloud is technically bullish, although it's kind of a flat cloud. And on the weekly chart, it's also more thick here. And you can see that it's finding support at the Tengen-sen. So, I'm going to give it the benefit of the doubt. I think that this has potential to still break through again. Maybe that was just a false break right there, that a little bit of fear in the markets that caused it. You got Exxon Mobil breaking through on the week ending January 16th here. Okay, and then here we are this last week, moving up, continuing. And this is what I'm talking about. Again, that's why it's important to look at those prior levels of resistance. Notice how it found resistance there and stalled. But then once it breaks through and you see the ADX is moving up and the positive DI is moving up and the red line is moving down, which is what you want, that's more, okay, evidence, right? Because we're using an evidence-based approach here. We're not just buying a stock and crossing our fingers, right, and hoping for the best, or throwing a dart on a dartboard, right? We are using technical analysis, this indicator, and it's a rules-based indicator, which makes it a little bit easier, right? So that we don't have to try to predict where the markets are. We're going to know live. We can't predict where it's going to be tomorrow, obviously, but we have a higher probability trade here with this, right? We want to be trading with the momentum on our side, not against our back. It's kind of like a sailboat, right? You want the wind on your back. You want it to push the boat forward in the direction that you want to go. If there's no wind, that means there's no momentum. There's no movement. If the wind is in the opposite direction, it's going to you're going to reverse course, and you just can't get through. So my point is, um, yeah, let's use the momentum when we can, and take advantage of these situations for as long as they last, because they can last for long periods of time, obviously. Okay, now the rest of these do not have a red flag, sorry, a blue flag, sorry, like BMNR. This is Tom Lee, appointed chairman of BitMine Immersion Technologies on June 30th of 2025, pivoted to focus on building an Ethereum-centric treasury, aiming to become the MicroStrategy of Ethereum. But it hasn't really performed that well. It had a big spike back here in June when Tom Lee became appointed as chairman, but it has not really. It's kind of just stagnant right now. Here's the daily chart too. I'd stay out of this one for the time being because there's no momentum, right? It's under the cloud, and there's no interest and there's no demand for that currently. Not enough. Then you have Caterpillar, which actually dropped on Friday under the Tengen-sen. Overall, it's a strong uptrend still in the daily and on the weekly chart. Okay, but on the daily chart, it does not get the blue flag because it closed under Tenkan. That might be short-lived. Capital One Financial looks a little bit more broken here because it broke under the Tenkan here, and that was the first sign that on January 9th. It then gapped down, it moved up, found resistance at the moving averages. Because remember, once you're under the moving averages, they act as a level of resistance, actually. It developed a spinning top, which is a negative candle, and then it dropped some more, came back, found resistance once again at the moving averages. The very next candle, it dropped into the cloud, and then now it's under it. So it's going to retest that 200-day. Back here, found some support at the 200-day. Maybe it will, but I would not be adding positions here, as this is now technically broken on the daily, and then the weekly chart, we're also under the Tenkan and Kijinsen. Disney, okay, under the Kijinsen, I'd skip that one because it's still not looking ready yet. GRNY is Fun Strat, Granny Shots. This is Tom Lee's ETF, okay? And this one here looks good on the weekly, but it has been consolidating. It's still under that 2633 level, the high from October 31st of 2025. So it hasn't really broken above that level. And these are large cap stocks that are held within GRNY. Here's a daily. Whoops, sorry, my bad. Let me go back. Here's a daily chart for GRNY. Okay, so yeah, it's just kind of stagnant here. Nothing major happening. IBIT is the Bitcoin ETF. That's also under the cloud still. The highs were back here on $71 or so, and it's dropped down to $50. So it's dropped about 29.6%. IBM under the cloud currently. All right, so I'd stay out of that one on the daily chart. Here's the weekly under the Tenkan. INTC, Intel, look at that shooting star. So it came back to these prior highs from December 29th of 2023, got rejected. And after the earnings announcement, you see what happened here. We were above briefly for a couple of days, and bada bing, bada boom, it gapped down. Now, all of a sudden, we are finding support at the Kijinsen. We might bounce here, but would I be adding a position here? And the answer is no. I mean, it dropped 17% on Friday. Then you've got MO, which is Altria Group. It's a tobacco in the tobacco industry. And this one here on the daily chart is looking bullish because it is breaking out above the cloud. The single span A crossed above the single span B right there. The future cloud looks good. The Chiku span is above price as we want to see. Okay, on the daily, on the weekly chart. However, it's lacking. It does not, you don't have confluence. All right, because the faster moving average is under the red line. The Tenkan is under Kijinsen. That's actually the only negative thing that I'm seeing on the weekly chart. So that's why I personally wouldn't add a position. But everyone can make their own choice about what stocks they buy. Verizon has stalled here, but it's under the cloud and it's under the 200. I'd stay out of that one. That's a weekly chart that you're looking at. Here's a daily. Seems to be finding a little bit of support around this area of, what's the low? The low right there is 38.39. So if it gets under 38.39, be careful with that one. Okay. All right, let's keep going. And then we've got XLF financials. That one also, like I said, the financial sector is starting to lose a little of its oomph. Right, we're in a downward channel now in the daily. You see that? Create a parallel line. Boom. Very clear to see where before we were above these levels right here. We also broke down through this trend line here. So that's a problem for XLF. And it also closed under the cloud. Okay, that's the daily chart. And here's the weekly under the both moving averages. I think it's going to continue dropping a little bit more maybe until the whole thing is resolved with the lawsuit and everything. And, the banks are not happy about the 10%, as you heard on the shows there. Tesla. Wait, we already did that. My bad. Let's go in the opposite direction here. We're going to now talk about our members' requests real quick. AGI. I had a position in this one from December 19th until January 14th. I did close the position there with these reversal candles, and then it actually pulled back the very next day, which is good that I got out when I got out. It's now retesting that level. 43.87 is being retested. It's based on the high of that candle right there from January 13th. It might break through. It has not though yet. So that's the thing I'd be watching. The ADX is going flat right now, but the positive DI is above the negative DI. That's a good sign. And gold is in fact a strong sector. So I wouldn't be shocked to see this break through. It was up 2.94% on Friday. Here's a weekly chart. Overall, very strong trend. RCAT, Red Cat Holdings Inc. Now, technically, okay, it looks good in that it is experiencing higher highs. Get a higher low here from the prior one. And the cloud is turning bullish. The Tenkan-sen is crossing above the red line. Chigu span is above price. All that looks good on the weekly, and on the daily chart, same situation. We got all those things. The only thing I'd be concerned about is the profit margins being negative 410.79%. But what we can do is take a look and see those. Let's take a look at those profit margins. Are they improving or are they getting worse? So that's important too, to look at the fundamentals real quick on that particular one. RCAT is the next one we're going to look here. There we go. This is aerospace and defense. And yeah, okay. So the most recent earnings announcements, you can see there that one was red, which means that they had negative revenue back on in August of 2025. Then this one here, November 13th, there was a surprise revenue increase of 14.15%. So that is interesting. It did lead to this move up that you see right there. So that was the catalyst, I think. Now the next earnings are coming out. Let me see. Hold on, let me go back to the chart real quick. Well, it's like, I don't know why this is all old information here, and it says the same thing, by the way, here. Earnings November 13th, AMC. I'm confused by that. January 21st. Let's see, which drone tech stock is the better pick now? I am not too sure why that is the case, where it doesn't show us other information. But let's look at the profit margins. And let me start off by looking at the quarterly here. Let's look at the quarterly, because that's more important. Net margins down here are improving. So you can see the histogram, right? But it only goes back to September 30th of 2025, but there has been an improvement. The gross margins as well. Well, maybe slightly down. Operating margins have improved as well. What does the free cash flow looks like? I'm just kind of curious. Free cash flow negative. So that's concerning too. So basically, I mean, if you're just looking at the technicals, I think that obviously it's showing a lot of potential here. We did get a bearish Harami pattern though, okay, on Friday. You can see that right there. So Thursday's candle, and then you've got this red candle following it, and that's a very small red candle. I do have a candlestick cheat sheet on my Twitter page that you might want to check out, guys. Let me just show you guys how to get that. Okay. So you can find me under @BlueCloudTrader if you go to x.com. And then what you want to do is you can see some of the posts that I've posted, including that most recent members only video. Of course, you do have to become a member there, but click on highlights right here and then scroll down a little bit. And then you'll find this, the candle pattern reference sheet. And this basically it gives you a little bit of insight on how to understand the Japanese candlesticks. And then this is the pattern that we're looking at. It's called a bearish Harami right there. Those two candles. I'm going to show you guys what that looks like right here. So what you would do is go under double candle patterns. And there it is, the bearish Harami. A large bullish candle followed by a small baby. And Harami stands for pregnant in Japanese, I believe. So that's what that is. And so it's a quick, easy way to identify it. And that's what we have here. Okay. Large red, bullish candle followed by a small red candle. So it doesn't mean that it's not going to continue moving up. It just means that there's a higher probability that we're going to see a decline. And this particular stock is it seems to be very volatile because that small, relatively small candle drop, there was a drop of 7.49%. So be careful with something like this, as it is very volatile. Okay, maybe have a small percentage of your portfolio in something like that. You reduce your portfolio size on that or portfolio position on that particular stock. SAN. Here's a financial services sector stock that does look actually good. It's a global bank, right? Based out of Spain, Santander. And here it is in the daily chart, looking very bullish, still holding up above Tengen Kijun. It's not being impacted by the situation that's happening in the United States. Here's the weekly chart. Very strong uptrend. I like Santander. Nothing bad to say about that one. WMB, Williams Companies Inc., energy sector, oil and gas midstream. Looks really good here. Looks like the momentum is increasing a little bit here, and it might break through that 65.55 level. All right. With the TC2000, you can put that level on the chart. You can right click and set an alert. Okay. And when price reaches that level, it will send you an email or text message so you know. I'm gonna hit OK. I'm gonna get an alert when this happens. Maybe one of the stocks that I add to the portfolio. So there's the weekly, there's the daily chart. All right, we're very, very close. We're just about 0.8% away from the prior high here, and that is from October 2nd of 2025. LNG is another stock requested. Cheniere Energy Inc. Here's the daily chart. It's currently inside the cloud. It's showing some strength since these lows here. It's moved up about 11%, but it is still inside the cloud and under the 200. It has not really proved itself yet. Here's the weekly chart. Under the cloud still. Okay, so it could find resistance around that level there, another 2.5% away from where we currently are, and could potentially pull back more. But it did find support, as you can see, at this prior level of 188.70. And so, do you see what I'm talking about here? Is it starting to make a little bit more sense why I use these support levels as well? Price tends to stall at a prior level of support, prior low. It tends to stall at a prior level that's a high up here, for example. Okay. Next, SEZL, Sezzle Inc., financial services sector, credit services. This is also under the cloud here in the weekly chart. Okay. I was lucky on this one because I had a position in this. Let me show you the daily chart so I can show you the trade that I had. And if you're a member, you can go back to those videos and find the videos going back to June of 2025 where I added this one. It looks like I added that on June 18th, and then I basically closed out here on July 8th. So if you go to the video ending July 11th, you could see the exit, okay, in the video. 17.7% profit. It was the perfect exit. Now, it doesn't happen all the time, okay? It's hard to get those perfect exits on trades. It really is. But that one turned out to be a beautiful exit. And basically, from that point right there, it's dropped 59.17%. Now, the thing with this one is currently on the daily chart, you're inside the cloud, you're under the moving averages, and you're still under this 200 day. But the 200 day is, in fact, moving up. If you look here, notice the slope is upwards. So, here's again the weekly chart. Yeah, I mean, it's just not the right time, in my opinion, to be adding positions here on this one. But it is showing some strength, and if you happen to have a position in this, I would be, holding it as it seems to be. It did create a higher low here from this prior one. So, and it did create a higher high here from this prior high, so that we might see this thing if it emerges and breaks above the Tenkan Kijun, we might see a continuation. Stocks don't drop forever. Eventually, they get so cheap that people want to get back into them. Okay, but this sector is not a healthy one currently, as I've mentioned. So that's why I would postpone getting into this one. And that's going to do it, guys, for this video. I know it was a long one, but thank you for watching. I appreciate all of you. Hope you're all having a good weekend or had a good weekend. It's Monday right now. It's Monday morning, 7:13 a.m. as I'm recording this. I know it's going to be a lot of snow shoveling, a lot of snow clearing. And try not to hurt yourselves, your backs, you know. Anyway, I will catch you all in the next video.